Hello, esteemed shareholders, board members, and partners. I am LaShawn Fofong, and it's with great pleasure that I present the Stockholder Report for FO Tread Bikes, covering our performance during quarters 4, 5, and 6 of the marketplace simulation. Today, we'll delve into the strategic decisions that shaped our journey, our financial health, and our outlook for the future. This past year has truly been one of significant progress and resilience for FO Trade Bikes. We focused on continued innovation in our core markets, pursued strategic expansion into new territories, and are proud to report solid financial results, which have enhanced shareholder value. Our commitment to sustainable growth and market leadership has been paramount. The purpose of this report is to provide you, our valued stockholders, with a transparent and detailed account of our financial performance, strategic initiatives, and overall operational health. It's about empowering you with the insights needed to understand our progress and future direction. Our journey is guided by clear corporate strategic thrust established in quarter one. We're committed to a balanced growth strategy. Firstly, our long term perspective means we strategically defer immediate profits to continuously reinvest in our capabilities, like expanding manufacturing capacity by 8 units each quarter. Secondly, our willingness to take risk is characterized by a cautious approach. We make strategic capital allocations like investing in capacity while meticulously maintaining substantial cash reserves. Thirdly, we aim for market leadership. By being first to market with cutting edge innovations exemplified by our 3D printed carbon fiber technology and new bike brands. Finally, our corporate culture prioritizes excellent customer service, which we're enhancing through initiatives like our new New York City Flagship Store. A cornerstone of our strategy is our market opportunity in advanced manufacturing. We are pioneering the use of 3D printing for carbon fiber bikes, leveraging an innovative and economical form of this material. This technological advantage forms the foundation for our new range of bike brands. This breakthrough allows us to produce bike parts that are stronger, lighter, and more cost effective globally. Our commitment to technological leadership sets us apart and reinforces our position at the forefront of the industry. This technological advantage is the foundation for our new range of bike brands, including Mountain 3 for mountain segment, CF Vector 3 for our recreation segment, and Aerial 3 for our speed segment. Now, let's turn our attention to a reflective analysis of quarters 4 through 6. This period presented both significant opportunities and challenges. Through careful review, we've identified key learnings. While we saw overall market growth, as you can see in the next slides, our internal decisions led to some missed opportunities. Specifically, we'll discuss our underinvestment in manufacturing capacity and the need to reassess our advertising expenditure. Analyzing our initial choice for manufacturing capacity, we observed its subsequent impact. Our original decision was not to invest in additional fixed manufacturing capacity during quarter 5 and quarter 6. In hindsight, this proved to be a critical missed opportunity that severely constrained our ability to capitalize on surging market demand. As illustrated, the total market demand for bikes soared from 9,653 units in quarter four to over 22,000 in quarter five and further to 40,181 in quarter six. Next, analyzing our initial choice for advertising expenditure, we observe its subsequent impact. In quarter five, we maintained a consistent advertising spend of over 1 million. These charts show our market share trajectory during this period. Despite a significant increase in total market demand to over 22,000 units in quarter five, our total market share for FO tread bikes experienced a decline from 27.73% in quarter four to 25.9% in quarter five. Considering why a change was needed and how it would be implemented, our strategy would have shifted significantly. A more aggressive investment in quarter five, specifically by increasing our spend by an additional 20 to 30%, bringing the total to approximately 1.24 million to $1.34 million. This would have been very beneficial. Our first key learning revolves around underinvestment in fixed manufacturing capacity during quarter five and six. Our original decision was not to add capacity, which, in hindsight, severely constrained our ability to meet surging market demand. As you can see, our total market demand exploded from roughly over 9,000 units in quarter four to over 40,000 in quarter six. However, our market share unfortunately declined from nearly 28% in quarter four to just over 21% in quarter six. This direct correlation indicates that our conservative stance led to unfulfilled orders, frequent stockouts, and ultimately lost sales. Moving forward, we would have strategically invested in an additional 8 units of capacity in both quarters 5 and quarter 6, driven by more aggressive demand forecasting and a stronger commitment to our long-term capacity expansion plan, thus ensuring we capture future market share and avoid those costly repercussions. Our second key learning centers on reassessing advertising expenditure in quarter five. We maintained a consistent spend of just over $1 million. However, despite the significant increase in overall market demand during quarter five, our market share still declined. This suggests our advertising was insufficient to truly compete with more aggressive rival campaigns. If we were to revisit this, we would increase our quarter five advertising spend by 20 to 30%. This more aggressive investment would be based on a proactive competitive analysis, allowing us to allocate a higher budget to amplify our brand presence, capture a greater share of mind, and convert rising demand into increased sale volume and market share. Now, let's celebrate our successes. A prime example of our positive strategic execution is the investment in our New York City Flagship Store. This decision directly aligned with our commitment to excellent customer service, which created a vital, tangible touchpoint for our brand. As you can see in the table, it notably strengthened customer relationships and contributed directly to increased sale volume in our recreation bike segment. Sales for this category, well suited for the urban environments, which grew substantially from around 1,343 units in quarter 4 to 3,521 units in quarter 6. This demonstrates the store's positive contribution to expanding our customer base and driving sales in a crucial metropolitan area, thus elevating our brand's premium image. Our second key success lies in our unwavering commitment to pioneering new 3D printed carbon fiber bike brands. This was a cornerstone of our market leadership thrust, backed by significant R&D investments as shown in the table on the top right. Looking at the table on the bottom, it illustrates the tangible impact, showing healthy generated demand for our new mountain segment offerings, particularly in quarter 5. By being among the first to market with advanced carbon fiber technology and new brands like Mountain 3 and Mountain 3D, we immediately differentiated ourselves, attracting early adopters and reinforcing our brand as an industry leader. This innovation fundamentally reshaped our competitive landscape and positioned us for future growth in premium segments. Now, let's examine our financial health. Our net income for quarter 6 stands at approximately 426K. Utilizing a price to earnings multiplier of 8, which is justified by our robust cash position of over 1.5 million, positive operating cash flow, and a healthy balance sheet. Our estimated company valuation stands at an impressive $3.42 million. This valuation speaks to our solid financial performance and promising outlook. Furthermore, our projected ROI for venture capitalist investors at the end of quarter 6 is a remarkable 127.68%. This means an initial investment of $1.5 million would have more than double in value, showcasing exceptional capital appreciation and validating our resilient business model. A closer look at our key financial ratios reveals further insights in our operational efficiency and stability. Our current ratio is now applicable, which is highly favorable, indicating strong liquidity with no current liabilities. Our inventory turnover of 18.77 is above the industry average, demonstrating efficient inventory management. The debt to equity ratio stands at a very low 0.13, reflecting a conservative financial structure and a low financial risk. While our return on sales is a positive 1.6%, it is below the industry average, presenting a clear opportunity to enhance operational efficiency and profitability per dollars of sales. Examining our cash flows for quarter 6 offers crucial insights into our financial management. We began quarter 6 with over $3 million in cash, ending with approximately $1.9 million. This decrease was primarily influenced by a significant shift in our net operating cash flow, moving from positive in quarter 5 to a negative $960,110 outflow in quarter 6. This outflow was a direct result of aggressive strategic investments in R&D, production, advertising, and sales force designed to fuel future growth. Our investing activities saw a $240,000 outflow, solely dedicated to expanding fixed production capacity, a strategic investment in our future. Notably, our financing activities remained at zero, indicating a period of internal funding and a deliberate choice not to seek external capital or engage in significant debt to equity transactions. In conclusion, FO Tread Bikes is committed to a holistic approach to performance. We are building a resilient, competitive, and customer centric business by investing in our people, fostering innovation, and operating responsibly. Our strategic vision, coupled with decisive execution, has led to solid financial results and a strong market position. We're confident in our trajectory for sustained market leadership and continuous value creation for all stockholders. Thank you for your continued trust and investment. We are now open for any questions you may have.